On today's hot sheet, I'm discussing Jerome Powell's meeting with the European Central Bank, mortgage applications, job openings, and the ADP employment report. Today is Wednesday, July 3rd, 2024. I am Byron Lazine, and let's go. Here goes the hot sheet closing out the week. On this holiday week, we will not be doing the hot sheet tomorrow. Of course, the markets are closed. Enjoy your 4th of July holiday tomorrow and maybe even through the weekend, depending on how committed you are to the festivities. Let me know what you think about the hot sheet with a like down below. Share this video with, share this hot sheet rather stream with someone who could benefit from a 24-hour look back on housing. We've got an action-packed, as I mentioned at the top, Jerome Powell. Haley, do you have the timestamps ready to go? Of course you do. Haley is always prepared. Who's more prepared? Which hot sheets do you enjoy more? The Haley produced hot sheets or the Bobby produced hot sheets? Let us know in the comments. Haley or Bobby? Haley or Bobby? Let's get Haley's here today. So maybe let's get a whole bunch of Haley's going. All right. Federal Chair Jerome Powell says the U.S. inflation is cooling again. Thank you, Jay Powell. Inflation is cooling again. So we had that spike Q1, and now we've seen here as Q2 played out that inflation is in fact starting to cool again. Question is that going to be the consistent theme as we move through Q3 of the year? Jerome Powell went on to say, despite the cooling, it's not enough and it's not time yet to start cutting rates. So Jerome Powell making it clear that we're not going to cut rates. Inflation in the United States is slowing again after higher readings earlier this year. He said there's much more evidence that would be needed for the Fed to cut interest rates. All right. So inside of your hot sheet show notes, we've got the entire transcript broken down for you, as we do every time Jerome Powell speaks right now, as it's critically important to our economy. There's a whole bunch of timestamps and data points from the Associated Press, as well as all of our other topics today. So many of you guys are using this inside of your database, inside of your communications with your clients to keep them educated. You can grab the hot sheet show notes inside of BAMX, along with everything else we do every single month. If you're not in BAMX yet, use code HOT to get 10% off of that. All right. So 16 minutes in, we had our first mention. This is CNBC's recording. First mention of housing from Jerome Powell. 16 minutes into the panel discussion. So this is like you go to a conference, you see a panel, and it's 40 minutes, 45 minutes, whatever the case may be. This is Jerome Powell on a panel at the ECB forum. 16 minutes in, we get our first mention of housing. Let's go to Jay Powell.
See and have been seeing. So, and services generally there's such a mixed bag, particularly non-housing services are a mixed bag. Some of what you're seeing is catch-up inflation from inflationary pressures that happened earlier. That's true with insurance. It's also true with housing services inflation, where you've got some pent-up rent increases that have to work their way off. It turns out it takes more than 1 year for that to happen. It takes several years. So we see all that in train. And, we don't see ourselves getting back to 2% inflation this year or next year, or maybe late next year, but in the year after. The main thing is we're making real progress.
Okay. So
is it
what he said there? Yeah, there. Thank you. What he said there was pent-up rent increases have to work their way off. We haven't seen that yet. Most of that shelter number is in correlation with rent. It's not with home prices. People think, home prices have a huge factor. Jerome Powell doesn't care what the home prices are because, in fact, he doesn't care if people buy homes. So doesn't matter to him if people buy homes. It matters to him to get inflation down to 2% and maximize employment. So he would rather see people just keep his job easy, go rent, and hopefully those rent prices are going down. Now, the rent prices, we just talked about this yesterday, they have come down for the last year. But Jerome Powell said it turns out it takes more than 1 year for those rent increases that were prior to work their way off. So despite having, a year now of declining rents or flattening rents or decelerating rents, however you want to look at it, depending on which model. It's going to take more than just this 1 year for those increases from 22 and 21 to work their way off of the inflation data. That's why he's talking about maybe end of next year. Remember, shelter and CPI is making up 36+% of the CPI report. So we're still a ways away. He's calling it end of next year at the earliest. That's a year and a half out from here to get back to this 2% inflation number. Now, they will start cutting before we get back to 2% inflation. So just reminding us, before they get to 2%, when they see that it's a certainty that we're heading towards 2%, that's when they'll start cutting. That's why there, theoretically could be one cut this year. Jerome Powell said that they expect there to be one, and you could have a few next year potentially going into kind of meeting 2%. You don't want to play catch up once you hit 2%. He said this in the past. The main thing, though, Jerome Powell said in that statement is that we are making real progress. So that would lead us to believe that we're getting closer to, that potential one cut this year. There was one other moment he mentioned housing. Let's go to that portion of the panel and listen to Jerome Powell mention housing for a second and last time here during the panel.
So I guess I would say, if you look at, we do think policy is restrictive, and we think that's appropriate. I think if you look at the labor market in particular, you're seeing demand for labor gradually come down in the form of job openings, and now a slight softening in unemployment in the form of wages. You see demand coming down, not just the supply that we're getting, but also demand coming down. You also see the effects of high interest rates in the housing market and in some other interest rate sensitive things. So you see that, and I think, I do think that restrictive policy is working hand in hand with this broad supply side recovery we've had, where we've seen the unwinding of the shortages and bottlenecks from the pandemic. We've also seen a recovery in labor force participation among prime age individuals in the US, and then some immigration, which has also been a positive supply shock. So we've seen all those things work together to give us, really significant declines in inflation. At the same time, we've got a strong labor market and growth. This was it's a great outcome for the people that we serve.
Okay.
And it's one that we want to do everything.
All right. So when he talks about the effects of high interest rates in the housing market and other interest rate sensitive things, he's not just talking about, because again, Jerome Powell doesn't care if people realize the dream of home ownership, doesn't care really where home prices are at. The high interest rates in the housing market impact way more than a first-time home buyer or a move-up buyer being able to buy a house. There is a ripple effect through a lot of layers of the economy. What do I mean by that? You're seeing now, and we just saw it even this week with housing starts. Housing starts are slowing down. Well, part of that is obviously existing home sale inventory is finally, for the first time, starting to increase. So they've got competition there, but it's very restrictive. The restrictive policy from the Fed creating a high interest rate environment has made it much more expensive for builders to commit to a project, for housing starts to take shape, for them to start building. Okay. And so they're going to do less of that. With less building, there's going to be less spending on materials, driving material price up. There's going to be less of competition for labor, which could drive labor wages up, right? They want to maximize employment, but they don't want it to heat up so far out of control. Like when we were at 11, we've got job openings here today, but like when we had 11 million job openings and all those salaries were, such a competitive environment for those that really needed to hire, that they had to really go out there and overpay for certain employees. They don't want that because that money ends up back in the system and pushes everything up. So there's a lot of different layers to just high interest rates in the housing market having an impact that pushes inflation down. Remember, real estate's like almost a fifth of GDP, so it touches a lot more than just the 4 million seasonally adjusted existing home sales that we're on schedule to see. Some other nuggets from the Associated Press. Inflation in the U.S. is slowing again. April and May is suggesting a return to the disinflationary path that we were on last year. Really, middle of last year and into the later half of the year, we kept hearing that we're on a disinflationary path, and if we stayed on that path, we probably would have seen rate cuts, as early as now, as opposed to potentially the first one coming the end of the year. The Fed raised this benchmark interest rate 11 times from March 22 through July 2023. And obviously, they've been paused since that time. Okay. Consumer price stability. Recent data showed consumer prices were unchanged from April to May, making the mildest reading in over 4 years. We've seen a lot of that on inflation readings. Mildest since 2001 in some instances, or 2020 in other instances. Okay. Regarding the labor market, which we're going to get into here in just a minute, Powell said it doesn't look like it's heating up or presenting a big problem for inflation going forward. It looks like it's doing just what you want it to do, which is to cool off over time. Okay. We've been talking about this normalization of the labor market. And you're seeing early signs that we're going to take a look at that, that it is coming back to normal. He wants the labor market to cool off over time, but he doesn't want, a complete recession or job recession or layoff situation, because that would spur the Fed to have to make a very difficult decision, likely to start cutting rates in reaction to that. All right. So there's the update from Jerome Powell. Obviously, heading into the holiday weekend, he spoke this week. So glad to see he's not taking the week off. He's still out there doing his thing, and we cover it every time he does, but not much new information there. Mortgage Banker Association released mortgage applications for the week. Of course, this is something that this time of year you would expect. You would have a seasonal move down on mortgage applications. That's been the trend really throughout history. You see mortgage applications on the purchase side decline this time of year as we get into the summer and we get on the other side of the seasonal spring market. And that's what we've seen here in the last week. The seasonally adjusted purchase index decreased 2% from last week. Okay, purchase index is what we're looking at, new purchases for homes. When you get the overall mortgage application number, that would include refinances, which is also down. The unadjusted purchase index increased 7% compared with the previous week. So unadjusted, it would mean not seasonally year over year. So just from last week to this week, but 12% lower than the same week 1 year ago when you compare the same week. So overall, mortgage applications throughout the year, this has been the story. Mortgage application demand, mortgage demand, buyer demand using a mortgage, however you want to say it, is down really comparably every single week this year versus the same week last year. Another way to say it, we have less buyers shopping in the market with a mortgage. Okay. And we haven't seen cash move up. So this is one of the reasons why you're seeing active inventory increase, even though we're only in the, we're bouncing up from last year on new listings, but the second lowest level ever recorded on new listings. You're seeing inventory increase despite the second lowest year ever on new listings accumulated onto the market. Why is inventory growing? Meaning accumulating more time. You just don't have the demand out there. Agents that don't understand this drive me nuts. There's a lot of demand, Byron. There's a ton of people that want to buy homes. Compared to what? Compared to the start of time? Not compared to any point in the last 25 years. Not compared to last year, which was a down year. Not compared to the year before. We are in truly a real estate recession when it comes to practical demand over the next 3 to 6 months. We're in a real estate recession on transactions, lowest level since 78. We covered that here. So we got to be real about the demand. I think that's going to help a lot of sellers not be one of those homes that realizes a price cut. 38% of homes right now are cutting the price, according to Altos research, before they sell the home because they're going aspirational off of 2022 prices. I'm not saying that the market's going to move down in a significant way on price. I'm saying we're seeing far too many sellers reach for aspirational stars, agents letting them dictate the terms of that sale price. And you want to go out on aspirational pricing. There's nothing wrong with that. It's not having the conversation, not setting those expectations of where the market truly is today and moving forward, which can put you in a tough situation with that client because you never brought it up. Okay, you just said, maybe somebody will come. We've seen it the last couple of years and overpay. Here's your mortgage application demand over since 1990. Okay, on mortgage application demand, it's the lowest level since 1995. All right, that's the reality of mortgages. Let's move over to job openings. Here's something I think that's interesting, and so Jerome Powell alluded to it, and something we're going to keep watching for. Number of unemployed persons per job opening. That number is starting to tick up. And so you'll see this as a theme. Most of these numbers are starting to tick up, showing a softening in the job market, a normalization in the job market. Here's job openings now. You would expect this number to be going down. And here it is. It is, in fact, going down. The trend is down. Okay, so not a huge change. We're still at 8.1 million. As of the last day in May for job openings, but this is well off the peak of 11 plus million. Over the month, both the number of hires and total separations were a little changed at 5.8 million and 5.4 respectively. Within separations, quits 3.5 million, and layoffs and discharges 1.7 million. Not much change. So the overall trend here throughout the year is these numbers are coming back down to normal. And nothing has changed there. Again, here are this is the same one we were just looking at. Unemployed persons per job opening starting to tick up on that one there. ADP had their employment report also just released. So a lot of employment data coming out here over the last week. Private sector employment increased by 150,000 jobs in June as we closed out June here just a few days ago. Annual pay increase rose by 4.9% year over year. Overall employment job creation slowed for the third consecutive month. So we're starting to see early signs, again, for normalization in the job market. Job creation, third consecutive month being down on those numbers. You had service providing jobs, 136,000. And if it wasn't for the service providing jobs, that number would be a lot lower. Okay. So service providing jobs would be things like transportation, utilities, information was actually down, financial activities, professional business services, okay, education and health services, leisure hospitality. Leisure hospitality was the biggest number at 63,000 of the 136,000 jobs. So that right there shows you that, okay, the jobs added third consecutive month down. We're talking about June. Half of those just about are leisure hospitality. Well, it's summer. Some of these are going to be part-time. So we could get out of summer and see a completely different job market. Obviously, the goal here is from a Washington, D.C. perspective, is to keep unemployment low heading into November. I think that's the last thing DC would want, is to see jobs get out of control. We've seen throughout the year, one of the biggest employers consistently as we dig into these job numbers has been the government. So I don't expect much change between now and the end of the year, but each month you're starting to see signs that add up to normalization or even a softening of the job market. Employment changes regionally. Northeast added 31,000 jobs. Midwest added 26,000. The South added 80,000. And the West added only 4,000 jobs. So the West not adding as many as other areas. Okay. There you go on your job update. And that is your hot sheet for the week here on a shortened week. I'm wishing everybody a happy 4th tomorrow, and hopefully you're going to have some time to spend with friends and family over the weekend, and maybe even do a barbecue. But if you get out of the 4th of July weekend and you're looking for one last barbecue, come to the BAM barbecue on July the 17th. It's a free barbecue. You don't even have to bring a potato salad. Okay, you can join the BAM barbecue for absolutely free. It's a live virtual event Wednesday, July 17th from 12 to 3. We'll put the link down below so you can sign up. If you register, you'll be entered to win 2 tickets to BAM Mania, Chris Smith's conversion code book, as well as possibly memberships to BAM X and more. There's going to be a bunch of giveaways going on at the event. Sam DiBianchi, looking forward to speaking with her. She's brilliant. Luca Cree from Reminder Media. Chris Smith, of course, the writer of the conversion code, the author, I guess that would be. Tom Toole, my co-host on Knowledge Brokers podcast, talking about time management. Paige Steckling, right now, the I would say the premier listing video agent in the game right now. Tim Smith's the OG, but Paige is certainly battling Tim for that title right now with the listing videos that she's putting out. I'll be helping moderate along with the broke agent and actually agents part of that event. That is July 17th. Don't miss BAM barbecue. Enjoy your barbecues here over the weekend. Be safe. I will see you guys back here on the hot sheet Monday, 9:30 on the East, 6:30 on the West. And until then, toodaloo.